exponential breakdown setup for LLY, Eli Lilly and Company, a company of the healthcare sector and drug manufacturers, here off the weekly interval, each kind of representing 1 week. And I wanted to get this much larger picture out. We have the 50 weekly moving average and 50 exponential moving average hovering right beneath below. And really what's so significant is we've put in a beautiful bearish doji star pattern here. And as you've seen in my previous videos, a lot of these bearish continuation formations and or bearish candlestick patterns usually acts as a weight of resistance on the buyer and seller data, and really between buyers and long traders and or short traders. And the more that gets added to the picture, the more the weight seems to take a toll on the price of the stock. As we'll see as an example here off of Bitcoin here, we've put in a bearish three black crow bearish continuation pattern, had a whole sense and a whole formation of bearish doji stars here, followed by another bearish engulfing pattern and another three black crow bearish continuation pattern, all kinds of bearish downside gap 3 methods, and more more three black crow bearish continuation patterns, and it acted like a huge weight of resistance amongst this entire span of time. And we had nothing but brief consolidation and snap, boom, these sell signals started saying. So like I like to say, they usually act as little pins that weigh down the buyer and seller data. And that's exactly what we're starting to see, the very beginning stages of Eli Lilly and Company here, starting with that bearish doji star. We'll zoom into the daily interval now, start to get into the insides of the hood here. And here we are with a beautiful dark cloud. This is what you call a dark cloud cover formation, followed by a massive bearish engulfing pattern. And here we are off the daily interval with some key metrics and key targets with key fibs retracement levels. And we've put in a massive divergent high, really building since August of 2021. We've got negative and or bearish divergences that have continued to construct and establish on all three indicators in the RSI, MACD, and oscillator for quite some time. And I like to say the bigger the divergences, usually what can happen is the bigger the drop. And here we are. And I truly believe a complete snap down breakdown below this minor uptrend line here off the October lows would offer an objective short trade entry on a snap below this key 345.42 price support, which coincides with the bottom of the gap there off of October. And I would only suspect a pretty large snap and or daily candle trend. Now, any bull traders and anybody that's bullish here for on any long traders, bull traders that are bullish on Eli Lilly and Company, right now is the time to start to step in to burn off and eke out these divergences, which is a potential. It's always a possibility. But it would have to be a pretty sizable and or powerful rally, and that's where I remain. The risk reward ratio remains and skewed to the downside, in my opinion, unless again some of these divergences start to get taken out. But a snap below that key 345.42 price support will coinciding with the gap, take out the gap, take out your 50 exponential moving average and or 50-day moving average. So I'll call it a triple line of resistance that will be taken out and will add to a sell signal, in my opinion, especially on a solid daily candle close, similar to what you saw here on Bitcoin. And that's exactly what you want to see, noting that it was really adding to the justification of just a massive inflection point for the buyers and sellers. Would especially an increase in volume, I think would do it and would do the trick, and would add an objective short trade entry, offer an objective short trade entry. And I truly believe it would be on a complete correction back to 312.31 price support, coinciding with the bottom complete backfill the gap in September there, which would be good for an 8.5% drop. And if we take out that trend line, that would put in an additional secondary sell signal, in my opinion, taking out that primary uptrend line there off some of the reactionary highs and lows, dating back to all of last year, 2021, the beginning of January there. As you can see, multiple reactionaries to help validate that. Again, if taken out, that would have put an additional sell signal, in my opinion, for another leg down, potentially down to 276.97. But yeah, some of your key levels to watch. And see what happens. Anything's possible. We already have that confirmed crossover here up to MACD. And near-term negative and or bearish divergences there on the RSI as well, with a potential crossover there on the oscillator. And what would be a complete breakdown sell signal down to its both the zero lines on both the MACD and oscillator there. So we'll see what happens. Anything's possible. I'll keep you updated if I see any more significance here in the charts.